Welcome back. Now, the BankservAfrica Economic Transactions Index ticked up by 0.4% in June to 139.1. This marks the second consecutive month of recovery in the index. And the good news, it points to a better GDP outcome in the second quarter. Independent economist Elize Kruger joins us with greater perspective on the findings of the index and what it suggests for the local economy moving forward. Elize, thanks so much for your time this afternoon. And maybe let's start by putting this index into perspective, looking at what it tracks and how that speaks to economic activity.
Yes, Darling, indeed, we are looking at economic transactions to the amount of about 1.36 trillion. 167.3 million transactions cleared through BankservAfrica during the month of June. And this pot of transactions, which include EFT, debits, credits, your RF real-time clearing, debit check, that's referring to debit orders, and PayShop, our latest real-time payment method. All of those transactions are in the same pot, and we are basically tracking the movement in this economic transactions pot, which is a great indication of economic activity. And over time, we have also tracked it to be having a very good positive relationship with real GDP growth. And from that point of view, it's really a timeless indicator, because as we speak now, we've got a good indication of what's happening in the economy in quarter two, compared to having to wait for Stats SA to only publish quarter two's GDP numbers by early September. So from that point of view, this is really a timeless indicator of activity and an indication of growth in quarter two.
So yes, boding well for second quarter economic prospects. While there was a decrease in April, we did see an increase in both May and June. Are the external risks being priced in, though, Elize? I mean, we do know that we have the tariff, the uncertainty around tariffs, also something that could weigh on economic activity.
Yes, indeed, those are risks that one cannot ignore. Although, if you look at the actual activity that already took place up till the month of June, we have seen the growth coming through. So it might be that some of those risks, if they play out, could hamper economic activity in the next few months, even towards the end of the year. But we've got other factors that are obviously, offsetting some of those concerns and risks, and those are still, I think, pushing forward in terms of the growth trend that we have seen. Specifically, if I could just mention a few tailwinds, I like to call them, is the fact that we still have low inflation in South Africa. We're sitting at 2.8%, looking at 3% for the month of June. We're looking at interest rates that came down, already, and a potential for a further cut end of this month. We're looking at real salary increases. So some other factors are offsetting the risks that we are afraid of or concerned about currently. And we will have to see how those play out in the next few months to see how that will impact on economic activity.
And one thing I find interesting is that the Betty also speaks to households spending more, right, Elize?
Yes, it's a broad measure. So it's not only tracking transactions, for instance, from households. It's also the corporate side that's incorporated. So it's almost really a snapshot of the overall economy's health at a point in time in terms of what has been spent in the economy. But it's definitely, I think, given that our economy is so focused and, consumer spending is such a big chunk of our GDP, that definitely, provides us some insight into that as well.
And let's talk about relief for consumers. We spoke about low inflation, with inflation at 2.8%. Let's talk interest rates. Last time I spoke to you, you were pegging in a cut in this month's meeting as those geopolitical risks subsided and oil prices moderated. You mentioned that you are expecting a 25 basis point cut this month as well, right?
Yes, indeed. And Darling, I'm still really believing that there's scope for the Reserve Bank to cut interest rates further by 25 basis points at this meeting. I mean, if I look at the economic activity side, we're talking about an increase in the Betty today, but overall for the year as a whole, GDP growth of about 1% is at best what we could expect. So that remains quite low, while we are looking at headline inflation to average about 3.5%. So inflation and growth both low, to me really opens up that opportunity for the bank to cut rates and just to stimulate the economy somewhat more. Because, if you think about tariffs, that is going to be a dampening impact on overall economic activity, not just locally, but also globally. So it will almost hit us twice. So from that point of view, a bit of stimulation from the monetary policy side, in my view, is still quite possible and appropriate given the low levels of inflation.
And is there scope for further cuts post this month then, Elize? Or are you still pricing in the amounts that we got already and perhaps the one we are going to get this month?
I think this 25 basis point, if it comes through in July, will most likely be the last one in the current cycle, which is quite a shallow cycle, in the light of the fact that inflation will be moving higher into the next 12 months or so. And from that point of view, I think it might be the last one, although I would still strongly, hope that they will cut, because I think, the consumers out there, the households are still under a lot of strain. And, if we have an opportunity still in terms of the economic environment, yes, there are risks, but again, there will always be risks. And we'll need to look at where you are currently and what are the likelihood for risks to materialize, in making that decision.
All right, Elize, thank you so much for your time and just unpacking that index for us this afternoon. That was independent economist Elize Kruger.